SAP, as we said, agreeing to buy Sybase. It is already the world's biggest maker of business management software. It couldn't get any bigger. Still, it bought Sybase for $5.8 billion. Just 2 days ago, we had Bill McDermott on the show here on Street Smart. He is, of course, the co-CEO of SAP. He is back now on the phone for an exclusive interview. Bill, thanks for coming back to us. You should have told us 2 days ago about this. I know you clearly couldn't. My question is, and a lot of people are asking this question, why Sybase? Is it for the database business, which the Lex column in the FT points out they only have a 3% market share, or is it more the mobile business on which you already really collaborate with Sybase?
Well, it's a combination of forces, Matt. First, the mobile business is the big idea. CEOs are running their company today in virtual boardrooms, and they want to run real-time enterprises, and it's difficult to do that if you don't have the people on the shop floor connected to the boardroom. So clearly, the mobile is the new desktop, and we recognize that provisioning those applications on desktop and handheld devices is mission critical to running companies today. So Sybase is number one in mobility. The other piece is analytics. We have a very big analytics business. We're number one in the world in analytics. Sybase has a strong practice, so that strengthens us further. They're also big in verticals such as financial services, telco, and public services, and they're flying in markets like China, where China has skipped the desktop altogether, and 75% of their knowledge workers are on handheld. So these are among the reasons why we knew this was a have-to-have asset.
All right, Bill, hang on a second. We're going to take a quick break here on Bloomberg. We got to pay our bills here as well, but we're going to come back, talk a little bit more with the co-CEO of SAP about that multi-billion-dollar acquisition.
And we do want to remind you, less than 15 minutes away from that closing bell, Jim Bianco will be here to walk us through the close, but we're back with Bill McDermott. All right, we are back with Bill McDermott, co-CEO of SAP here on Bloomberg. He's back now on the phone for an exclusive interview. As you know, SAP buying Sybase for nearly $6 billion. Hey, Bill, I got to ask you a little bit about the price, because we're hearing that the big premium and letting Sybase basically kind of run as a standalone company was necessary in order to get Sybase to agree to sell. Is that true?
No, actually, Carol, we wanted Sybase to be a wholly owned subsidiary. The company has a great brand. They're a flagship company in the industry. If you take them in the mobility space, they're number one. In analytics, they're super successful in industries such as financial services, which we talked about. Telcos, 900 different telco companies have about 1.5 to 2 billion SMS and MMS messages running through Sybase every day.
Right.
So why would you want to run the risk of making any moves that would slow down the progress of a company like that? We wanted it to be separate, and that was an easy decision to come to.
What about the 56% premium? Was that necessary in order to make this deal done? Because we had heard also, too, that they were talking to Oracle.
I don't think they were talking to Oracle. The 56% is off of the actual close date, or the offer date, I should say.
Still, Bill, it's 15 times EBITDA, 25 times profit. It seems a little pricey.
Okay, let's just give you a couple of instances where I can tell you it's a win-win. One is I don't have to take out any cost on the synergy side to make the transaction work financially. So Sybase is a $1.2 billion revenue, $400 million plus license. They push off about $400 million in free cash flow at 30% margins. So this isn't about cost synergy. It's all about top-line synergy. So therefore, the price is affordable. We benchmarked it against all the IT transactions at the 44% uplift on the 3-month average, and it's very consistent with other deals that have been done for marquee assets like Sybase. So I'm very comfortable with the price, and incidentally, there are many analysts today that are in numerous papers around the country saying, how did they get it for less than $10 billion? So we did okay.
Hey, Bill, let me ask you. You and Jim Snaba just came in as co-CEOs of SAP in the middle of February. I covered the company for years, lived in Germany for a long time. Nobody has done anything this fast in Germany, probably since the war. How did you get this done, and why so quickly?
Well, you know, we always focus on customers, and today customers need to make their enterprises real-time. So the combination of mobility and moving the application to the handheld, which is the new desktop, was huge. Taking advantage of our in-memory computing technology, which essentially enables enterprises to process information and data at the speed of light or the speed of thought, in combination with Sybase's core and what we can do with their install base and potentially what they can do with ours over time. And the idea of joint analytics just said, hey, this is a match made in heaven. Now, how do we get it to happen quickly? John Chen is a friend of mine for many years, and there's a lot of trust there. We got our mutual teams together. We rallied around the value to shareholders, to customers, to the ecosystem that would be partnering with us. It was such a natural. We were able to bring it to closure and get full support all the way up through the supervisory board in record time.
But does this say something about the new leadership of SAP? I mean, you have installed already smaller teams there. Are we going to see more quick action from you and Jim? Are we going to see more acquisitions going forward?
I think you're seeing, Matt, resolute leadership. In the first 100 days, we wanted to make it clear to the world that we would have a new strategy. We were going to double our addressable market. We were going to align our leadership team, the customers, the ecosystem around growth. We've done that. We looked at the addressable market and knew we had to get into new spaces, such as in-memory computing, such as mobility, such as this whole notion of taking in-memory combined with database and really driving an analytic machine for our clients, and we moved on that. We won't be doing a whole bunch of big transactions. That's not necessary. We need to make this one successful and make it work. But what we will be is a very agile, quick-moving global machine, an SAP that's there for customers, an SAP that makes them successful, and an SAP that's a growth story.
Hey, Bill, just got about 30 seconds. Or any chance that this is also a little bit of a response to Oracle CEO Larry Ellison? He openly mocked your company, SAP, in his latest earnings results. Is this kind of a warning to them as well?
No, it's not at all personal with us. We try to avoid those barbs going back and forth. Look, they're in a tough position at Oracle.
Unavoidable.
After investing more than $50 billion in acquisitions, they still remain half our size in the application software space. They're in a tough bind. We understand that. It's not personal. We just want to get after new market opportunities, serve customers in new and more innovative ways. And we don't do acquisitions to consolidate industries, to harvest maintenance and margin, which is their story. We do it because we think there's innovation, there's growth to be had, and we see Sybase and SAP as an indomitable force in mobility, in-memory technology, and analytics going forward.
All right, hey, Bill, thanks so much for spending some time with us. Look forward to catching up with you and Jim as you guys transform this business. Bill McDermott there, the CEO, co-CEO, I should say, of SAP.
All right, we're going to get back to the markets now. We're just about 4